Price drops first, but the recovery cannot stay. The session forms under compressed memory. May 7th Asia session forms at the lower boundary of May 7th US session box. It forms with about 50% compression inside that May 7th US session box. It does not start from open space. It starts at the lower side. It starts inside pressure. It starts where the market must decide fast. That matters. When a session forms at the lower boundary of its own US memory, buyers have one job. They must reclaim. They must hold. They must build distance. If they cannot do that, the lower side stays heavy. May 7th Asia session first moves inside May 7th US session box. It does not leave cleanly. It rotates. Bodies stay smaller. Reactions come back. The box keeps pulling price back. Then price drops. It reaches May 4th US session lower boundary. It tests that lower memory. The move looks bearish. But the short is not created by chasing the first red move. A trader still needs the failure point. Price has to bounce. It has to test recovery. It has to fail there. Only then does the short become structured. Then price rises again. It reaches toward May 7th US session lower boundary. That level matters. If price can reclaim that lower boundary and stay above it, the short weakens. If it touches and cannot hold, the downside pressure remains. Price reaches. It reacts. It cannot build clean distance. The bounce stalls. Continuation fails earlier. Reaction gets faster. Now the prior short structure remains alive. Short entry line. May 6th Asia session upper boundary. Stop-loss line. May 6th US session midpoint. Take profit line. May 6th Asia session negative 150% area. This is not a random short. This short comes from failed recovery. May 6th Asia session had already formed under pressure. Price had already failed to reclaim. May 7th Asia then continues that pressure by forming near the lower side again. The entry stays at May 6th Asia session upper boundary, because that was the upper side where recovery failed. If price cannot reclaim the upper boundary of the compressed Asia structure, sellers keep control. That is the entry logic. Not red candle, not emotion. Failed reclaim. The stop sits at May 6th US session midpoint. That is the line where the short loses control. If price reaches that midpoint, it has reclaimed too much of the US structure. The lower pressure is no longer clean. The short idea is damaged. So the stop stays there. Not too close. Not random. It sits where the idea breaks. If price reaches the midpoint, you leave. No hope. No argument. No waiting for one more candle. The target sits at May 6th Asia session negative 150% area. That is the first downside extension after the Asia structure fails. If price loses the lower side and cannot reclaim, that negative extension becomes the first place to take profit. The trade pays there, but the move keeps pressure. So trailing becomes possible. First trailing target, May 6th Asia session negative 300% area. That area matters. It sits near weekly 0.5. So the move is no longer just a 1-hour extension. It is reaching higher time frame pressure. When price reaches higher time frame pressure, you do not get greedy. You watch the reaction. You protect the short. You do not assume continuation. Price can slow there. Distance can shrink there. Pullbacks can deepen there. The market can take back profit fast. If price reaches that area and immediately reacts, the trail has already done its job. If price holds below and keeps distance, then the short can continue. Second trailing target, May 7th U.S. session, negative 150% area. Risk-reward ratio, 4.48. That second trail only works after the market pays the first distance. You do not move the target because you want more. You move the target because price earned more. The target moves only after distance appears. The stop must also move. A trailing target without a moving stop is just hope with a better label. The market already paid. Now the trade must protect what it earned. But the stop cannot be too tight. If the stop sits directly behind the last candle, normal reaction can touch it. Then the trail damages the trade. If the stop stays too far behind, the trail protects nothing. So the stop follows structure, not fear, not greed, not the last red candle. If price keeps failing to reclaim May 6th Asia upper memory, the short can stay active. If price returns into the box, the short weakens. If price reclaims May 6th U.S. session midpoint, the short is damaged. Now partial profit can help. If price reaches the first target and starts to slow, protect more first. A conservative trader can take 60% first and leave 40% for the trail. If price keeps pressing down and pullbacks stay shallow, an aggressive trader can leave more open. An aggressive trader can take 40% first and leave 60% for continuation. The choice comes from price behavior, not personality, not hope. If the second push slows, do not wait for the perfect low. A conservative trader can take 50% first, then 30%, then 20%. If reaction stays weak and price keeps distance, an aggressive trader can press harder. An aggressive trader can take 20% first, then 30%, then 50%. But percentages do not save a weak trade. They only manage a trade that already has structure. If price cannot keep distance, protect more. If price keeps distance, let the rest work. Now watch the full sequence. May 7th Asia session forms at May 7th U.S. session lower boundary. It compresses by about 50%. Price moves inside May 7th U.S. session box. Then it drops to May 4th U.S. session lower boundary. Then it rises toward May 7th U.S. session lower boundary. That recovery fails. The short remains valid. The entry remains tied to May 6th Asia session upper boundary. The stop remains tied to May 6th U.S. session midpoint. The first target sits at May 6th Asia negative 150%. The first trail reaches May 6th Asia negative 300%, near weekly 0.5. The second trail reaches May 7th U.S. negative 150%. Risk-reward ratio, 4.48. The short does not come from selling late weakness. It comes from recovery failure. The bounce reaches. It cannot hold. It returns. That is the pressure. That is the execution. Price rotates again. But the final session removes the trade. The session forms inside the previous box. May 8th U.S. session forms almost overlapping. May 7th Asia session box. It expands slightly, but it still stays close to the same structure. It does not open a fresh clean space. It forms inside memory. It forms inside rotation. It forms into the end of the week. That matters. A session can hold the midpoint. A candle can look stable. Price can rise. But if the session is the final trading window, and there are only a few hourly candles left, the trade changes. The clock becomes risk. May 8th U.S. session continues inside its own session box. Price does not leave cleanly. It moves inside. It tests. It returns. Then price pushes higher. It reaches toward May 7th U.S. session lower boundary. That level matters. It was broken memory. If price can reclaim it cleanly and stay above it, the downside pressure weakens. If price only tests it and cannot build distance, the market remains trapped. Now look at the May 8th U.S. flow. It holds near the midpoint. That can look like a long. The midpoint holds. Price pushes up. The body moves away. A trader wants to buy. But this is where the trap begins. The session is still inside the box. The week is almost over. There are not enough candles left to give the trade room. If you enter from the midpoint, near the end of the week, you may not get time to manage. You may not get time to trail. You may not get time to escape. That is why the long is difficult. A midpoint hold is not enough. A final session midpoint hold is even weaker, because time is part of risk. If this were a larger time frame trade, the final session might matter less. A daily or weekly structure trader can hold through the calendar, but a 1-hour session trader must respect the clock. The method is built on session movement. The method needs time after entry. The method needs enough candles for target, reaction, and management. When the week is almost over, that space disappears. So the official decision is no trade. Not because price does nothing. Price does move. Not because the midpoint is meaningless. It matters. But the trade quality is weak. The session does not offer enough clean execution time. If a position was already open from the previous session, the decision is different. A trailing position can be held because the trade already earned distance. The risk is already reduced. The structure already paid. That is not the same as opening a fresh long at the end. A fresh entry adds new risk. A trailing hold manages old profit. Those are different actions. An aggressive trader may hold a prior trailing position. A conservative trader may still close, especially in the last session of the week. Because final sessions can trap. They can reverse without warning. They can stay inside a box. They can make the chart look alive, while the trade has no room. Now look at where price is rotating. This is not a random place. It is meaningful higher time frame memory. It is near February daily basis box upper boundary. It is near February weekly basis box upper boundary. It is near weekly 0.5. It is near the 2026 monthly basis box lower boundary. That is stacked pressure. Daily memory, weekly memory, monthly memory, all near the same zone. So the market is rotating at a serious location. That can create strong reaction. It can also create false confidence. A trader sees the midpoint hold. A trader sees price pushing up. A trader forgets the larger wall above. That is the danger. Higher time frame pressure can make 1-hour entries fail faster. Distance becomes shorter. Pullbacks deepen. Continuation fails earlier. That is why a new long is not clean. If price had broken above May 7th U.S. lower boundary and held with distance earlier in the session, the long could be studied. If price had more time and a clean target above, the trade could be considered. But here, the session is late. The box is still holding. The higher time frame zone is close. The trade does not deserve risk. Now think about a short. Could a short form? Only if price fails at May 7th U.S. lower boundary and moves back below May 8th U.S. midpoint. But even then, the final session problem remains. The trade needs room. The trade needs time. The trade needs a target. If price only rotates, there is no clean execution. So the answer stays no trade. No forced long. No late short. No midpoint chase. No emotional end-of-week entry. The better action is to protect the account. If you already have profit, protect it. If you do not have position, wait. That is not weakness. That is execution. No trade keeps the method clean. No trade keeps capital ready. No trade keeps the next setup available. Now connect this to the earlier short. The previous structure gave a valid short. Recovery failed. The short paid. Trailing could extend. Then May 8th U.S. gives a different message. Price holds the midpoint, but the session is late. The trade is inside the box. The higher time frame memory is heavy. The final session reduces space. So the method changes. Earlier, execution. Now, restraint. That is real trading. You do not trade because a line holds. You trade when the line holds, with time, space, and target. Here, the line holds. But time is weak. Space is limited. Target is pressured. So the trade is skipped. The chart still matters. The rotation tells us something. It says price is sitting at an important decision area. It says next week may open with strong pressure. It says the next session memory will matter more. But today, inside the final session, the clean trade is not there. So the plan is simple. Mark May 8th U.S. box. Mark May 7th Asia overlap. Mark May 7th U.S. lower boundary. Mark the higher time frame cluster. Then wait for the next session. If price holds above the cluster and builds distance, the long can form later. If price fails there and returns below the box, the short can form later. If price keeps rotating, you wait again. The final session does not demand action. It demands discipline. Price reaches. It reacts. It holds or fails. But if the session cannot give time and space, the account stays protected.